It's an undeniable truth that the world wants to move towards renewable energy and greener forms of energy. And electric vehicles are one of the avenues in which that is happening. So movements away from internal combustion engines to EVs. But it's very important to take a step back, because it's easy to conclude, looking at the one side of the coin, that based on the shift towards renewable energy and electric vehicles, the demand for oil going forward will not exist. But it's very important to look at the other side of the coin and say, well, actually these electric vehicles, one, they do plug into some wall, and they need that energy to be generated from somewhere, would be the first point. And it's probably can't all come from renewable energy sources. You can't all have rooftop solar charging your cars. There are other aspects. The take-up in electric vehicles, we're not going to go from 0 to hero in 1 year. So we don't deny the fact that EVs are going to become a greater portion of automobiles sold going forward, but it's not going to happen instantaneously. But by far and away, the biggest or most important part of the other side of the coin is what happens on the supply side, because everyone acknowledges that demand for hydrocarbons going forward is not going to be either the same, or certainly nowhere near the same growth rate as we've experienced in the last 10 years. But it's not possible to conclude what that means from an investment unless you look on the supply side as well. And all of the world's oil and gas assets are decaying assets, and they deplete, some a lot more quickly than others, like US shale at 40% per annum, and others at around 5 to 8% per annum. And so when oil prices are very low, little money gets spent on the next generation of supply, and so you tend to find that supply falls off quite quickly. And so it's not clear, in fact, and we don't think it will be the case as well, that we will have a significant oversupply of oil in 5 years' time. Supply will match demand, and investment will be such that, or the price will be such that whatever investment is required will be made. We think the oil price is too low for new supply to generate an economic return, and I mean, there's no cure for low prices like low prices. The other thing worth mentioning is that all of the oil companies we invest in and that form part of our energy overweight aren't in fact oil companies, they're gas companies. Origin, Woodside and Oil Search all have gas liquefaction. And it's it's widely believed that gas is actually the less polluting hydrocarbon out there, and if there is a shift away from oil, gas is likely to be a beneficiary of that when it comes to electricity generation. But the two are interchangeable, and we do need to have some idea of what oil prices will be going forward, but we don't have a crystal ball. But we've done a lot of work that simply comes back with the oil companies are on a hamster wheel at the moment. They're running very, very fast to go nowhere, and it's not sustainable. And unless oil prices increase quite meaningfully going forward, supply will fall short of people's expectations.